Well, good day, traders, and yeah, some interesting moves that are playing through in the Asian time zone today. There's a lot of noise going through. I think it's very difficult for people to react to these headlines when you're getting such conflicting headlines. But if you have a look at price, and we always look at price above everything else, and we look at the boards today, the Asian market's looking pretty good, with the exception perhaps of the Australian market, which is looking pretty flat on the session. But certainly around China, where you've got the China CN 50 up 200 points there. You've got the Hang Seng up 320 points or 1.2%. And the Japanese market's finding a bit of action today. Okay, we've seen the retail sales numbers coming in at 1.2% there, pretty much in line with expectations. But certainly Asian market's looking pretty attractive and pretty strong. There has been an article that came through in the South China Morning Post that suggested that we could see a tentative trade deal. Now, how much can we believe in that? I certainly think that the Australian market's not getting too excited about that. But it kind of goes against everything that we've been seeing in the last 12 to 24 hours. President Trump talking about a plan B and suggesting they could put tariffs on about 10% at the remaining bulk of goods if nothing comes to fruition. We've been hearing from the Global Times editor as well, who's been sort of the mouthpiece of China there, talking about various factions, but it doesn't look like they're seeing any kind of positivity or convergence there. And of course, we saw Stephen Mnuchin yesterday also talking about various factors very much in the past tense. And yeah, the market's been sort of hit with these different rhetorics, and we are coming into that G20. This is a big marquee event for market traders. And, you know, we do come into Saturday at the risk of some gapping for the morning open. So that's something you do need to be aware of if you are managing those exposures going into the weekend. We do know that President Trump and President Xi will be meeting on Saturday, 11:30 Osaka time, local time, or what's going to be 12:30 midday for us here in Australia. Obviously, you know, we'll do the calculation there for the UK and Europe, but, you know, that's going to be an event risk. The markets will be closed, and if we hear something that's very positive, bear in mind that the expectations are so low, we could see a bit of a pop on the open on Monday. So we'll have to see how that goes. But certainly Asian market's looking good. And if you have a look at our opening calls for Europe, at the moment you can see the DAX being called up 42 points. We can see the Wall Street Cash up 57 points. The S&P up about 9 handles at the moment. And then you've got the FTSE up about 5 points. So looking a bit sort of languishing a little bit there in that capacity. But certainly, you know, we are seeing some buying coming through in those opening calls, obviously a reflection of what's happening in the futures markets there. In FX markets, it's interesting to have a look at the boards there and see the the Aussie dollar up only 9 pips on the session, but just pushing that 70 handle. Dollar yen 108.60 seeming to be moving up a little bit higher there, and I think that's a reflection that we are seeing good selling in the bond market. Certainly overnight we saw front-end US yields, US Treasury yields up at 4 basis points. We've seen another 2 basis points higher in the session there, so people are starting to reevaluate this 50 basis point cut, which had certainly been largely priced in. If you look at the Aussie curve as well, you can see some really good selling coming through in the fixed income market. That's boosting dollar yen there, which is obviously seen as a proxy of what's happening in the bond market. It follows those yields very, very closely. So an interesting session. We are very much in this kind of noise situation where we're watching all the headlines that are coming through. Very difficult for fundamental based traders to try and stay up with everything that we're hearing at the moment. Obviously keeping our eye firmly on Twitter and any of kind of those breaking headlines, but it's all about the G20 and the subsequent reaction of how these central banks are seeing that convergence or the divergence between those two nations. Another one we're watching as we go through the Euro session, if we look at the event risk there, we've got some CPI numbers coming out of the Eurozone. So of course we're watching what happens in euro dollar, which is currently trading 113.60, down about 9 pips on the session or so. So see how those German and Spanish CPI numbers play into that. In the US, not a huge amount of data. We've got Q1 GDP revisions. I wouldn't expect that to necessarily be a game changer in any capacity. It's very backward looking. We are expecting that to be ticked up to 3.2% from 3.1%. We've got that quarterly PCE, the Fed's preferred measure of inflation, expected to come in at 1%. We get the main one tomorrow, so that's what I'll be talking about then. But apart from that, very much business as usual. There's not a huge amount of economic data to drive, and we're keeping our eye firmly on oil, as I've talked about in Trade of the Day. We've got up to $60 on oil. It looks like it's been faded there. We've hit the double bottom target, and certainly are reacting very positively to that massive drawdown in inventories that we spoke about last night. So, yeah, certainly one to watch as we go through here.